Welcome, everybody. Welcome to ZionCapitalFX. My name is Chance. I'm going to do something a little different. I'm going to go over one of my bad trades. I'll call it Confession of a Bad Trade. All right. I figured I'd do this because I see on YouTube all the time, and this is just a generalization. You see the trading gurus with their 300% gain, risk to reward on a single trade, or just these crazy astronomical trades. And I'm not saying that uh, they're not true. I'm not saying they're fake. I'm not saying, but it's just unrealistic for the guy and gal that's starting out in this journey. So what I thought I'd do is, instead of showing you all my all-star superstar trades that occasionally happen, I'm going to show you all my bad trades as they come, right? So for me, I learn better from the mistakes I make and not from the successes that I have, right? There's more of a pain factor on the mistakes, and those tend to stay on the forefront and they get locked away, and I remember them a whole lot more so than the good ones, right? Um just FYI, like, this is me opening up, right? This is I'm giving you a glimpse into the way I think and the way I am. So I know there's going to be some people out there be like, "Wow, he took a really really dumb trade." Well, guess what? That happens. All right, I got demons too. Greed, avarice, impatience. They know me well, right? And I don't think everyone is immune to that. So, as you progress in your trading career, those demons never go away. Uh, you just get better at managing them, right? It's like you're throwing a block party, and that one neighbor that you didn't invite is knocking on the door wanting to come in, and he's just trouble. Yeah, just don't even, he's there. Just don't even entertain the idea of even going to the door and opening or talking to him. Just let him stay outside on the front porch and stoop for a while, because he's going to bring you nothing but bad news if you let him in, right? So that's kind of like how I deal with my pitfalls. I know they're there, and I just try to manage them. I try to not let them affect me. So without further ado, let's talk about this. This is a trade that I took on London session, March 21st, 2023. Let's share the screen here. I got to get better at this computer stuff, I'm telling you. Here we go. So you're seeing NASDAQ on the 4-hour time frame. And I think we can agree that we're seeing bullish structure. And I say bullish structure because price had been going up and then it started coming down. This is all swing structure in my eyes, right? And then what it did was it changed character, right? It broke structure here or here, either way you want to call it. It broke structure. I'm looking for longs with a higher time frame standpoint. And I've got the swing low marked out with this horizontal ray and the swing high marked out for with a horizontal ray as well. And those are just my the bumpers on the side of the road, because I like to zoom in on a smaller time frame chart. So when I see those rays, I know I'm getting close to the extreme, and there's usually a good reaction, right? You can see it in these wicks. There's a good reaction. Well, there's a reaction there for a reason. Okay, so I like being able to see those when I'm zoomed in on the lower time frame. Like I said, this is the 4-hour. I think we can agree that this is bullish structure, right? You're seeing the structure come up, up, down, up, down, and up, all that jazz, right? Boom, bullish structure. Okay, so I'm going to zoom in to what I was seeing. Let's go down to the 1-hour. That puts us at 9. Ooh, let's see. I'm going to speed up just a little bit. That puts us at midnight, 1 a.m., 2 a.m. Now I'm going to start zooming in. Let's go to the 5-minute time frame. You can already see where my trade is that I took. And just watch my stupidity, I guess. right? So we're going to go to the 5-minute. Now, part of my strategy, so you're going to see a glimpse of my strategy. My strategy, I have the DR and IDR range on my chart and the EMA, and for whatever reason, it's not part of my trading plan or my strategy, but I had the relative strength index, or no, I'm sorry, it was the ultimate oscillator on my chart. Let me get it up here. Let's see. Okay, there we go. Now, the ultimate oscillator is used to detect divergences. For whatever reason, I think I was just grasping for straws trying to add confluences to this trade when I entered, and there was a divergence according to the oscillator, and I'll show you what I'm talking about. So this is the 5-minute. And let me zoom into the 1-minute here. Now, I guess let me back up, right? So I'm going to back up on the bar replay. I'm looking for a retracement. I know NAS is I'm looking for longs, right? So anytime there's a break of structure, I'm looking for a retracement. So there's this swing low, and I take my fib. This is just a retracement tool, and I'm looking for any rejections off the 0.5, the 0.618, or the 0.786. In my eyes, if I get a strong rejection off of one of those areas and the Fibonacci, I should get in the trade. So as you can see, we get some strong 1-minute candles. London's opening. It's going down. It's going down. I've got this stuck in my head that I want to see longs. I keep going, and then boom, right there. I see that candle. It rejected just below the 618, almost to the 786, and it closes above the 618 level. So I'm thinking, okay, I'm going to get in right there, and I did. I did because also the other reason that I did is there was a divergence. And you'll see it right here. Price from that low to that low is going in an upward direction. And then on the ultimate oscillator, it's going from there down in a downward direction. So divergences, the ultimate oscillator is basically it's detecting divergences that other indicators might necessarily pick up, like the relative strength index. Think of divergences like in the Matrix, that deja vu moment when Neo sees the black cat and he's like, whoa, deja vu. Everybody starts freaking out. It's because they know there's a glitch in the system or something's not right. 2 + 2 isn't equaling 4. Next thing you know, agents are swarming them. They're being attacked, all that jazz. I kind of relate divergences to that. So here we've got higher lows being formed, but we're having a lower low being formed here. So momentum is dropping off, but price is going up in a escalation. So that's telling me that the selling pressure is letting off. The momentum for selling is letting off. This is a bullish divergence. I'm expecting price to just skyrocket from here. And it being London Open, literally within the 1, 2, 3, 4 first 5 minutes of London Open, I'm thinking NAS is just going to, turn on a dime and just skyrocket. And that was my thought process, right? As dumb as it sounds, that was my thought process, and I just had this like hunch, right? But like it was just like one of those deals. Like, oh man, all I could see was the dollars, right? I was seeing the outcome. I wasn't seeing the process, and that's where I messed up. So as you can see, price does go up, right? And I'm thinking, sweet. Oh, no big deal. It's just retracing. No big deal. It'll go back up, right? It'll go back up. It'll go back up. Whew, it's going back up, right? So just an FYI, my take profit was 12,700 up here. I was expecting NAS to break through this last swing high on the 4-hour chart. I was expecting it to make an all new higher high for the day. That was my mindset, right? I'm looking for longs. I see bullish structure. I looked at the 4 hour. The higher time frame is telling me it wants to go higher. I'm following that, right? I'm zoomed in on the 1 minute chart, right? So at one point in time, I was up 1.2%. And to let you in a little secret, I was actually up more than that because I had multiple positions open. Shh, I know it was dumb. I was dumb. I usually am really on par. I take pride with the fact with my risk, I'm like on key or on point with my risk management. Not so much today. I took a hit. Not I'm not ashamed of telling you that. So I'm expecting it to go. It's going. I'm like, ooh, yeah, it is going, making that money, right? Then it starts turning on me. I was thinking I was in the clear though, right? Because here we got a higher low being formed. We got a higher high. It broke the structure on the 1 minute. We got this change of character. I'm thinking I'm in the clear. Like it's good. It's gonna go. It's gonna go, right? But no, the trade just boom, knocks me out, right? So here's some that I want you to think about. And I didn't let you in on this either, but on the 4 hour, let's go to a 30-minute time frame. See this teal line? I'm going to get rid of this ultimate oscillator. See this teal line? That is the 50 EMA, the exponential moving average. And you can see for quite some time, when it's going pro trend, it really follows that 50 EMA, right? It just comes back and pushes through whenever it goes in a retracement. It was following that EMA. What I should have done, and this EMA is the 50 EMA on the 15-minute time frame. And what I should have done is, let's go back to the 1 minute. Couple things is what I should have done. I should have done like what my strategy tells me to do, my trading plan tells me to do. Wait for the first hour London session to establish itself before you even start looking for a trade. I wanted to hop in a trade so bad at the beginning of London session because I wanted to make the big money that I went against my plan, and which is a huge no. And obviously I got stopped out, right? So I was risking a couple percent in hopes to gain 11.48 times 2. So hoping to gain 22% on my account today, right? And the real kick in the pants comes just a little bit later. So, it continues to push down, right? What should have been my first hint that something was wrong was we almost get like this equal lows. Let me hold on. Visual order send to back. We get this right here and right here. I'll move my arrow. Get this equal lows thing. Now I see a pattern with NASDAQ, especially on this. Anytime equal lows or equal highs are formed, they usually get mitigated or swept by liquidity, right? So, and guess what happens? It gets swept on the lower time frame. So, and that's where it took me out of the trade. It hit my stop loss, right? And also look at how close the 50 EMA is. The moving averages, when they're this close and mechanical traders are basically at the forefront and they're running the market. We'll talk more about that, but I could definitely tell mechanical traders or technical traders were in charge right here. And you'll see what happens. I should have waited for the hour of London session to close, the first hour, and I should have waited for price to come back to the 50 EMA. And you'll see why. Boom, boom, boom. All right there. Hits the 50 EMA, right? I'm going to go back to the 5-minute chart. Things are a little bit clearer now, huh? So when you zoom out, you start to see things that you didn't see beforehand. When you're zoomed in, like on the 1 minute, you can't stay on the 1 minute all day. That's another one of my problems. I tend to stay on the 1 minute a little too long. But we have this rejection off the 50 EMA with that bullish candle. Now, this is where my trading plan comes in. When the DR and IDR range forms, which is the first hour of the market session, I wait for a candle close outside of the DR, which you see with these lines. That gives me an indication I'm looking for sells. In this case, the DR and price are telling me I'm looking for sells, but I know better. I know better because looking at the 4-hour chart, I'm looking for bullish structure. I'm not looking for sells, I'm looking for buys. So this is the one time in my trading plan, I have it written out, I can break the rule to my strategy. I'm not going to go short. I'm looking for buys because the higher time frame trumps what my trading plan is telling me. Price action is king. So I know this is where I should have gotten in. I'm going to go back to the 1 minute. And you'll see we get this big reaction push up. Boom. Okay. Now this is where my strategy comes in. I'm going to wait for price. Once it breaks structure right here, I'm going to wait for price to return. Then I'm also going to get the Fibonacci out, the Fibonacci, and I'm going to wait for a retracement that hits the golden zone, and then I'm going to ride this up. This is what I should have done. And if I would have followed my plan like I should have, it would have been a great day. So we're waiting for some kind of retracement to start. I'm just keep adjusting my Fibonacci until it tells me. Okay, hits the 0.5. Boom. All right, I'm going to get in right there. So get my long position tool. And I'm going to put my stop just below. I tend to NASDAQ. It's 10 point or more stop loss. So I'm going to put 10 points right there. That puts me at the 618. I'm happy with that rejection. I'm also, the other reason why I'm happy with that rejection, I'm not looking for it to push anymore. This candle right here, this bearish candle, price dips into that. It's almost like a 1 minute order block, and I'm okay with this. So I'm going to target like what I did before, 12,700. I'm waiting for NAS to break. I want NAS to break that higher high. So I'm going to put it at 12,700. Again, that's an 11.5 hour trade, right? This is the trade I should have waited for. So I'm going to go back to the 5 minute chart, and you'll see this play out a whole lot faster. That's what it looked like on the 5 minute. Let's just see what it does. See what's going on here. Yeah, I'm not too happy about it. So what's the key takeaway here? Key takeaway is I have a trading plan and a strategy for a reason. It's written out. My strategy is tested and it works. And I didn't adhere to it today. Instead, I took a I'll be honest with you, more than a 2% loss when I could have gained 11.5% easily. And on any other day, I don't know what the reason was. I would have taken that trade, and I would have been done for the rest of the week trading. I probably would have taken next week off too. This is where patience and discipline comes in. And you can tell. So let's go to the 4-hour chart. Boom! It took out the high. Here's what I'm getting from it. I could beat myself up, and I could beat myself up all night, think about it, dwell on it, get more angry at myself. But the thing that I can appreciate is I was right. I was right to be looking for longs. I read the price action right. in the long term, I read it right. I didn't see it for what it was in the moment. I got caught up in the moment. I was seeing the outcome. I was visualizing the outcome of the dollar bills. I wasn't paying attention to the process. You gotta focus on the process. When you focus on the process and you play it out, you got the odds in your favor. You're adhering to your trading plan, your strategy, and you're not worrying about the money. Um, I've said it before. Making money is easy. Uh, you can tell I'm a little upset. I'm being honest with you because I got greedy. I wanted that instant gratification. I saw an opportunity. If I was smart about it, I could have scalped that, you know, could have made that high, and then knowing that I really needed to wait for the first hour of London, gotten out with some profit, and then wait for London to close and wait for the prime time. You got to wait for the setups to come to you. You got to wait for the trade to fall in your lap, wait for all the conditions, all the requirements, the prerequisites, wait for them to get to meet every single criteria that you have, and then enter the trade with confidence that you're gonna come out on top. It's all about stacking the odds in your favor. If I would have just um oh man, I'm kicking myself in the butt because I'm usually good about this. If I would have just adhered to my strategy, I would have had a killer day. And but that's the reality of it. So now I'm kicking myself in the butt and I'm dwelling on it, and I can already tell that I'm tilted, right? My emotions are getting the best of me. This is where learning from your mistakes comes in. I know that I'm affected. I was going to get up and I was going to trade a London session tonight, but because of this, I need to take the day off. I need to just calm down. I need to chill, and I just need to get away from the charts for a minute. So I'm going to take tonight off. I know where I went wrong. I didn't follow my trading plan or my strategy. If I had just done like how I've got my strategy written up, it would have been a killer day. I would have gotten that trade 99 times out of 100 any other day. But for whatever reason, I just had a piss poor time executing today. You know, and that being said, I say I had a piss poor time executing. A calm sea never made a skilled sailor. There are people out there, there are sailors, traders out there that are afraid to get off the dock and get in the boat, right? They hesitate, they don't execute, they don't get in the trade, and the boat's left them, right? I didn't have that problem today, right? I was too eager to get on the boat. I was too eager to get off the dock. You know, I tripped and slipped and I fell right in the water. That's what happened. So instead of being patient, instead of staying disciplined, um, I'm paying for it. So I want this to be a lesson. I have no shame in sharing all this with you. This is how it goes. This is the reality of it. And the other thing is, maybe the next time I come in to trade, I might get that 1 to 11 trade, or I might get a 1 to 2 trade and be happy with it. You know, that's the thing. So, um, confession of a bad trade. Number 1, you saw it. There it was. Anyway, let me know if you like this, if this helped you. Put in the comments. It was lengthy, I know, and I could go into a whole lot more detail about the analysis and my trading strategy and all that, and I will. I feel like for some people that are just getting into it, it might confuse the crap out of them. But either way, there you have it. So I'll be doing more of these because, like I said, I think the misconception that everybody makes these 300% R gains is just unrealistic. It's not how it is. This is the reality of it. You're not gonna. No one has a 100% win rate. And if they do, um, I'll just say it. I think they're lying, right? You can have a 100% win rate for so long, but you're one trade away from humility. That's all I got to say. So anyway, if you liked it, hit like, hit subscribe, leave a comment, all that stuff. I appreciate you guys listening and hearing me ramble about one of my bad trades. It's still bothering me. It's bothering the crap out of me. But I know it's bothering me because I know what I should have done. You know, hindsight's 2020. I'm usually good about staying unaffected. I pride myself on staying unaffected, but for whatever reason, I guess the perfect storm was just brewing inside me. This one got to me. So, yeah, I'm gonna end it there. Thanks everybody for watching, and I'll see you next time. Peace out.